Cable is testing a level right now that I haven't seen threatened with this kind of velocity since the trust budget meltdown. 1.3418, this number right here, is the only thing standing between an orderly correction and a full-scale liquidity cascade that could drive sterling another 200 pips lower in a matter of days. But here's what most traders are completely missing. The political noise that's destroying the pound is masking one of the strongest UK GDP quarters we've had in 2 years, and that sets up a magnificent trap. One danger zone that could wipe out late shorts, and one hidden opportunity to ride a structural breakdown. I'll show you both. And if you stay until the end, I'm giving out 3 exact entry and exit levels you can place right now. This is not a theoretical video. This is your daily battle plan. Before we even look at a chart, here is your instant market verdict. The session bias across every time frame that matters is strong sell, fading every rally, shorting every pop until proven otherwise. The invalidation level that would flip the whole structure is a daily close back above 1.3556. Write this number down now, 1.3556. If we get a firm acceptance above that, the bearish thesis is dead and we are looking at a massive short squeeze back toward 1.38. But as long as price remains below that magnetic line, every intraday bounce is a selling opportunity. Comment this number right now. Type 1.3556 is the line so I know you're with me, paying attention, and not just passively watching. I'll read those comments later. Now let's walk the charts the way I do every morning with my institutional hat on, starting from the top and drilling down to the execution frame. Weekly pound sterling to US dollar. Absolutely brutal. We have a clear lower high formation around 1.38 from a few weeks back, and now the weekly candle is accelerating through the 50-week moving average like it's not even there. The 200-week sits way down at 1.29. So if this break sustains, the gravitational pull toward that level becomes very real. Weekly MACD histogram is expanding to the downside for the first time in months. There is zero bullish divergence, just pure momentum driving lower. Drop to the daily chart. The strong sell designation is not an opinion. It's the machine reading. Price is below the 20-day moving average at 1.3520, below the 60-day at 1.3405. That one has just been sliced through intraday, and the 200-day is still far below at 1.2850. This is a textbook bearish alignment with every average sloping lower and fanning out. What really worries me is the daily MACD. It has crossed bearish below the zero line and the signal line is accelerating. No signs of convergence. The last time we saw this pattern without a meaningful bounce was during the Brexit aftermath. Support we had at 1.3451, that was a prior demand zone that held twice last week, has now been taken out with conviction in the last 12 hours. That level has now flipped to resistance. And I'll be using it for my active trader setup. The next support zone is exactly where we are trading, 1.3418, which represents a series of daily lows from mid-March. If this gives way, the next structural support doesn't appear until 1.3320 and then the psychological 1.33 handle. With little in between except stops being hunted on the 4-hour chart, the picture is even cleaner for execution. All moving averages are stacked bearish, and the 5-hour trend is strongly aligned. We are making lower highs and lower lows with no hesitation. The 4H MACD is deep in negative territory, showing no hidden bullish divergence at all. This suggests the selling pressure is genuine, not an exhaustion move. The volume profile shows a high volume node right at 1.3418, which means a break below this level would trigger a vacuum effect, a rapid liquidation of long positions that could gap down to 1.3350 in minutes. That's what I want the sniper setup to catch. On the 60-minute, we are consolidating just above 1.3418 in a tight flag. This is the coiling before the break. If we get a 15-minute candle close below 1.3410, I consider support broken, and momentum algos will pile on. Here's where the crosser-set web becomes crucial. The dollar killers, euro to US dollar and pound sterling to US dollar, are fracturing, and that divergence is sending us a loud signal. While euro to US dollar is still defending 1.07 and seeing some hawkish ECB flow supporting it, Cable is getting absolutely no help from the Bank of England or domestic dynamics. The euro to pound sterling cross is ripping higher through 0.80, meaning the pound is losing ground not just against the dollar but against the euro. This is a pure sterling confidence crisis. The US dollar index is driving higher on hawkish Fed repricing and safe haven bids because the S&P 500 is showing cracks, risk sentiment is fragile, and that typically crushes the pound given the UK's twin deficits. Gold is relatively stable, which tells me this isn't a global systemic panic yet, but rather a targeted pound liquidation. Oil is choppy, not driving the story. Bitcoin's correlation with the S&P is holding, and if equities roll over further this afternoon, expect another wave of USD buying that will hammer cable. So the fundamental backdrop is amplifying the technical breakdown. Now let's connect the last 24 hours core news directly to price action. The headline says it all. Sterling down as political noise drowns out strong Q1 growth. The UK just posted a quarterly GDP print that beat expectations. The economy is not falling off a cliff. Yet the pound is selling off because a fresh political scandal is eroding confidence in the government stability, and markets hate uncertainty. The Bank of England rate path is already almost fully priced, with 2 more hikes expected. But if political turmoil escalates, the bow might pause sooner, and that rate differential against the Fed narrows. The US, meanwhile, is seeing stubborn inflation and a labor market that just won't cool. So the Fed's higher for longer narrative is gaining steam. This policy divergence is widening in favor of the dollar. The 2-year gilt versus US Treasury spread is collapsing, moving directly against sterling. So when you see pound sterling to US dollar dipping, it's not a random move, it's a real yield repricing. My 1 to 2 week directional lean remains aggressively bearish, targeting 1.3250 initially. But the invalidation is clear. If UK political noise suddenly clears and we get a dovish Fed surprise, a violent snapback above 1.3556 would trap me, and I'd flip long instantly. That's the discipline. Most people will skip the next part, but this is exactly where money is made. Keep watching. I'm going to lay out 3 trade strategies with exact triggers, stops, and targets. No guessing. No hope. Strategy 1. The sniper, conservative. This is for the patient trader who wants confirmation. I'm looking for a clean 15-minute close below 1.3410. That's just a tick below the 1.3418 support, and it confirms breakout momentum. Entry short at 1.3408. Stop loss at 1.3470, above today's intraday high and above the broken 1.3451 resistance, giving the trade room to breathe but invalidating the breakdown thesis if triggered. The logic is simple. If the breakdown fails and price reclaims that zone, the trap is sprung, and we step aside. Target 1 is 1.3330, a major support from the previous structure, giving a risk-reward ratio of about 1 minute and 2.3 seconds. Target 2 is 1.3250, a key level from February, with a risk-reward of nearly 1:4. I'll take half profit at target 1 and let the rest run. What voids the setup? Any 4-hour close back above 1.3451. That would signal a failed breakdown and likely a squeeze. Strategy 2. The active trader, standard mean reversion short. Here we wait for a pullback to the freshly minted resistance at 1.3451. The market rarely gives you entries at exact levels without retesting them, and I expect a small dead cat bounce toward this zone as short-term profit-taking kicks in. Entry short at 1.3450 if we get a bearish rejection candle. A wick, a bearish engulfing on 15-minute. Stop loss placed at 1.3505, above the 1.35 round number and clear of noise. The reasoning: a break above 1.35 would be a higher high on the hourly, disrupting the bearish sequence. Target 1 is 1.3360. That's a minor reaction level and just above the 1.3350 vacuum zone I mentioned. Target 2 is 1.3300, a psychologically significant level and a prior swing low. Once target 1 is hit, move your stop to break even and trail it by 30 pips on the remaining position. This lets you capture a potential extended move while locking in a risk-free trade. This setup has a risk-reward of about 1:2 for the first target. Let's see how aligned we are as a community. Type your pound sterling to US dollar range for tomorrow in the comments right now. High and low estimate. I'm reading them and I'll call out the best calls in tomorrow's video. Drop it below. Strategy 3, the aggressor. High risk, high reward, for those who know how to. Lose small and manage risk aggressively. We are in a strong sell environment, and momentum is king. Entry short at current market price, 1.3421, immediately, no waiting for confirmation. This is a momentum chase, betting that the consolidation at 1.3418 breaks before any bounce. Stop loss at 1.3465, extremely tight, just above the recent minor swing high and the 1.3451 resistance pivot. That's about 44 pips of risk. Target 1 is 1.3340. That's a measured move from the flag breakdown, roughly the width of the flag projected downward. That's 80 pips of potential profit. Risk reward close to 1 minute and 1.8 seconds. If you're aggressive, you can target an extension to 1.3290, but only if you've already scaled out. The warning: this trade can hit your stop in minutes if a fake-out spike occurs. Only take it if you are comfortable with a quick loss and have strict position sizing. No hesitation on the stop. Let's hit the risk management pulse for 30 seconds because this is non-negotiable. Never risk more than 1 to 2% of your account on any single trade. No positions held through high-impact UK or US data without reducing exposure. Stops are not suggestions, they're hard lines. Live to trade another day. Now, as we wrap, here is the one critical level you must wake up staring at tomorrow. 1.3418. If it holds and we see a bounce, expect a rapid retest of 1.3451 and possibly a short squeeze toward 1.3556. If it breaks and we get a 4-hour close below, the next leg target's 1.3320 and then 1.3250 very quickly. The catalyst will be any fresh political headline or the UK CPI data due tomorrow. I'll be breaking that down live, so you need to be here. Tomorrow's focus is entirely on whether this political storm intensifies or clears, and how the dollar reacts to the FOMC minutes. If you want the full breakdown on Bitcoin and the S&P divergence that's confirming this risk-off move, that video is live now. Check the end screen and continue the binge. You'll see exactly why BTC is following the S&P lower and where the next liquidity grab is hiding. Smash like if this analysis gave you a clear plan for tonight's session. Subscribe and hit the bell so you never miss these daily battle plans across all 8 key assets. I'll see you in the next one. And remember, volatility is where fortunes shift. Be precise, be protected, and I'll be right here with the levels.